Hello, everyone. Welcome to another episode of On the Record with your host, Tone Vase. Jimmy is going to be joining us shortly. And to pick up on our early episode this morning, we are back in our Millennium Falcon captain chairs with your host, Spock, clearly from my hair. And right now I am joined by Tuur Demeester. You just got off the stage here at the conference. And what do you think so far? I'm really liking the University of Texas. It's great.
Oh yeah, beautiful campus. Yeah.
And you're local here to Austin.
Yeah, I live here.
Excellent. So the reason why I wanted to have Tuur on is to talk a little bit about economics and price. And most of my audience is familiar with your work, though you were doing a lot more in the past. I know when I came up, you were one of the a few people that I really, really respected in this analysis and the trading game, and you understand technical analysis and trading. Let's start off with, what's your view on fundamental analysis versus technical analysis?
In general, I mean, I think that they both have value. To me, fundamental analysis is more about kind of like, where are the currents in the ocean and like how they recur and understanding that. And then like technical analysis is more about the waves and more like the present market psychology. And I think both are important because if technical analysis allows you to identify some of the probabilities in the space, but then if you lack a fundamental view, that can you can make some mistakes when it comes to allocation. Like you can see a technical setup, and if you understand the fundamentals, you can understand that it's a highly risky asset. So maybe you still want to make that trade, but you'll have a lot smaller investment at stake, for example.
Gotcha. And Jimmy, thanks for joining us.
I got you some water, Tuur, so you can grab it.
That's great. Jimmy was being productive while we were setting it up. And we do have the live chat. We will see. Maybe we'll grab one or two questions from the audience. But I got a lot of stuff to talk with Tuur about. It's going to be very, very interesting. And our conversation today is actually going to focus on your paper that you wrote in early January that is now publicly available. Recently, now that it's been a few months, there is a link in the video description. So we're actually going to go straight to screen share, and we're just going to go through this document a little bit. I actually just read it over. It's pretty good. So it's basically your 2017 year in review and your outlook for the crypto space and Bitcoin going forward into 2018. You can see the date of the article. It was written January 21st. So you talked about the year 2017 being the year of the fork wars. Want to give us like a brief summary of what you saw happen and how you saw it go down?
Yeah, so basically early 2017 is when we saw the Bitcoin transaction fees, at least the perceived average Bitcoin transaction fee, goes slightly above $1. And I think that was kind of a psychological threshold. And so a lot of projects that didn't really go anywhere before all of a sudden got more traction, which was basically, most of them were focused on forcing a hard fork towards a higher block size. And but I think there's other projects too in the space, other coins, other ICOs that were trying to capitalize on, Bitcoin is too expensive, we can do it better. So building a better Bitcoin has been a lot of the story of 2017. I think it's going to continue in 2018, but that's kind of the lens through which I saw it. And if you see the Bitcoin dominance decline over 2017, I think it's just, there was this, how could you call it?
Well, we'll get to that.
Oh, sure.
Yeah, we'll get to that as well. Now, I actually forgot to say, so Tuur, you've been in the space since like 2011, pretty much, right? You were already writing and talking about the economics of Bitcoin back then. Before, probably, were you around before Litecoin?
I don't remember consciously the launch of Litecoin. I remember learning about Bitcoin, I think it was April 2011, and then I wrote my first articles about it somewhere in 2011, and then early 2012, we recommended it as an investment for the newsletter. But yeah, I don't quite remember when Litecoin came out. Maybe I missed that at the time.
I think it was 2011.
Yeah, I believe it was 2011 as well. So I highlighted a couple of things from the report that I wanted to focus on. And in it, you say, The total number of ICOs is estimated at 235, and this was back in September. So it's already been 6 more months. How do you see? And you also mentioned that you were already feeling that the ICO space was saturated. I just watched you get off the stage with a guy that didn't only do a security token, at the same time he did a utility token. So do you really see this ICO tipping point, or are we going further?
I think it depends on, people are expecting regulators to step in, but the question is, what's that going to look like? What is it going to be a crackdown with the capital C, or is it going to be kind of a lighter touch? And if it is a lighter touch, I think this thing could kick into the next gear where, we see larger institutions trying to do fundraising using ICOs, Fortune 500 companies, maybe other governments who give it a try. I'm just really trying to be aware that, I keep giving this example, but in 1996, Greenspan had his famous irrational exuberance speech, and he was hinting at .com. But still, and a lot of people knew that things were frothy, even as early as 1996, because there were just a lot of vaporware already. But it went on for another 3 years. So
Yep.
I don't want to be on record saying, it's over. I do think there was a slowdown, and it's, investors are right to be a little bit cautious about this whole ICO space.
No, I have that part highlighted, so we'll show that to the users as well. So getting back for a minute, back to the hard fork days, were you vocal about the user activated soft fork, or if you weren't, like which side now that it's over, you say in your report that the user activated soft fork was a pretty dangerous initiative, and I kind of agree with you, but I think I got on board around June. And I believe it started around March, but around June, I felt that I needed to like say something. Were you ever public about it, or even privately, like which way were you leaning?
I don't think so. Privately, I was sympathetic to the cause, but I don't want to, promote things that potentially are reckless. I'm not an engineer as well, so like I feel like I'm not in a position to really evaluate the specific trade-offs from a technical point of view. So I just try to inform myself and share what I learn. But I do think that there's some things that the miners were doing that was just wrong. It just kind of misleading, and really trying to push their view of things onto the community by trying to keep up this idea that if miners would back something, that would create the reality, which is not true. I mean, it's the economically important nodes that make the Bitcoin network, basically the holders, the Bitcoin savers. They are the ones who decide where Bitcoin is going.
And actually, I have one more question, then we'll let Jimmy throw some in there. How much did you feel that this Bitcoin like debate and this huge controversy over the scaling of Bitcoin, how much did that help Ethereum's rise over 2017?
Well, I think significantly, because the perception was that Bitcoin was this very messy space and everybody was fighting with each other. And meanwhile, Ethereum had smooth sailing and they were growing and all the ICOs were being launched. I think even Andreas at some point commented that, these Ethereum proponents who were criticizing Bitcoin, they were kind of like these sailors who were looking at this little boat in the storm, but then their own boat was still in the harbor, like it hadn't even left the shore.
That's a good
so
analogy.
that basically that scalability problems only come when you're actually scaling. So yeah, I do think that was part of the win in the sales of projects like Ethereum. Yeah.
Jimmy, you got any questions for Tuur before we can go through the rest of the paper, and then we can like throw some stuff randomly.
Yeah, I mean, I have random questions about like sort of. I mean, Tuur is a very good investor, obviously. If you subscribe to his newsletter, then you've gotten in on Bitcoin in 2012. That's a pretty good track record. I'm curious, sort of as another investor, like what are you looking at now?
Yeah. Let's see. So Bitcoin is in the infrastructure phase, I think, still. So So really, and one of the privileges that we still have today is like owning Bitcoin means that you're plugging into the backbone of the entire space directly. So that is an obvious, attractive point. I think there's some interesting trades to be made. You could, I think one hedge that you could make is you might go short Tether versus the dollar, which is kind of, if something goes wrong with Tether, then that's going to go up, and that might hedge your other currencies declining more. I think that's, and then the downside, I don't think there's really a realistic scenario where one Tether USD would double in value somehow against the dollar, right? That's a bit weird.
So very low downside, very high upside.
Yeah, potentially. There's, there's some Bitcoin proxies like Litecoin still, but right now I just think that we're still in a bear phase. So long term, hold on to your long term holdings, I think is a good idea. But we were talking about this earlier. I think it's a little too early to say that Bitcoin is resuming its uptrend. I think that we might have more to go. There's more follow to come.
We're definitely going to get Tuur's look at the price. All right, let's just.
But I do think there's a few Bitcoin contenders that could be interesting, like Bram Cohen's Chias. I find interesting.
Proof of space and time. Yeah.
Yeah, like things like that, where where very experienced engineers don't immediately ridicule it and say that it's unworkable.
They do have good engineers working on it.
Right. I mean, and to be fair, there were good engineers who said that Bitcoin was unworkable. So you have to be, look at many aspects.
Yeah, that's the part that I always have to deal with, right? Like, look, I understand that every generation throughout history, someone comes along to challenge the current norm of something, whether it's the sun revolving around the earth or around the sun, whether it's the theory of gravity, or whether it's something like Bitcoin, not that it's on that scale, but just as an example. So yeah, someone shows up and that says so different and revolutionary, or like an Einstein that says I'm going to go against the norm, and here it is. But somehow people now assume that anybody can do it, and it happens every 3 months, as opposed to like a once in a generation event.
Yeah.
Okay, so let's get to your. So I'm just going to go through a paper chronologically. Your views on Bitcoin Cash. I highlighted right here. You say that you don't see it as a future, as a decentralized currency. Here's your chance to expand on that real quick.
Yeah, I mean, I just don't see, if you have big blocks and then your roadmap is to just increase the block size and you don't have SegWit, and so your access to things like Lightning Network are so constricted, and you have all this rhetoric that's against Lightning or payment channels, to me, it's like, okay, they're going to try to scale, but it's going to be centralized because the blocks are just going to, and people always say, oh, you can just, just buy a big hard drive, it's cheap, but it's really, the bottleneck is really the censorship resistant bandwidth, right? It's about bandwidth much more than hard drive space. And the bigger the blocks get, the more bandwidth needs you have. So, I mean,
not only that, the CPU verification is not trivial when you get to a very large size.
Yeah, that's a good point too. So yeah, I just don't see, I don't see the engineering pedigree. I don't see any, because if something comes from a hard fork and that they have a bunch of hard forks in their roadmap, how are you ever going to build things on top of that? Now, how is it a reliable platform if you want to do, let's say, I'm just saying, say that you want to do a Bitcoin Cash ETF. Like, what is Bitcoin Cash? How do you define it? Because there's going to be more fragmentation down the road when there's these new hard forks. There's going to be Bitcoin Cash Classic and Bitcoin, whatever.
Classic already happened.
Exactly, that already happened.
But also, like they're saying that there's only one developer team on Bitcoin Core, and they have like 5 Bitcoin teams, including the failed Bitcoin Unlimited and a few others. But they're all like under the same umbrella. Like, I don't understand.
Well, they still centralizing making decisions. Right. It's they're releasing a roadmap. I mean, you can only do that if you're centralized. So
right.
Okay, so
and it's deceiving too, right? I mean, the name Bitcoin Cash is deceiving, and so I think that's just from the get-go, you're communicating to the world like there is some dishonesty in our approach.
And you also mentioned the problems with the scaling of Ethereum. You want to elaborate on that?
Yeah, we've talked about this in the past, right? I mean, I think it's the same issues still, even though there's like several potential solutions like Plasma. There's proof of stake, even though that's not really scaling. There is Raiden, which is like their own Lightning version, and then there's sharding. Sorry?
Which needs a token for some reason.
Oh yeah, who knows why? And then there's sharding, and so there's not really. This is the weird thing, is that if you're truly decentralized, weirdly you have like a consensus that emerges from developers who are like, this is the most sound solution for now. You saw that with Bitcoin. It's like they were like sidechains looking at that and other solutions, and eventually some kind of consensus arose that let's now try and make Lightning happen, and a lot of that has been pushed. But with Ethereum, I just don't see that. It's like you hear this person is talking about this project and that is, so I'm just wondering like how thorough is this research really, that not one solution has come to the fore, being very, like Raiden, they one of the main developers announced a minimum viable product by March 2017. That's 13 months ago by now, and we haven't seen anything.
Yeah, I'm like trying to put a timeline in. I'm like, wait a minute, that doesn't make
It's not
sense.
unusual for Ethereum.
Well, but you have to be forgiving too. Like, it takes a long time to do these things, but I'm just not seeing the pedigree necessary to pull off these incredibly scientific breakthroughs. Really, I mean, like sharding is it's never been done in the history of the world, and so and a proof of stake
in a decentralized way.
Well, yeah, that's what I mean.
Centralized.
Absolutely, yeah. But it's the same with proof of stake. It's like, that it's proven that you need an external source of trust to pull it off, but then supposedly they have a way to do it trustless.
No. Vitalik says if you get on, like if somebody tries to take over, you should check Facebook and then go based on that. Yeah. I mean, he's literally.
I'm not surprised anymore. Yeah.
All right, and your general thoughts on Ripple?
I don't have very, very strong thoughts, other than it seems obvious to me that it's centrally controlled. I don't know about its adoption, but it's just, if it's centrally controlled, how can it add a lot of value over something like the dollar? Maybe they can tout more transparency and higher auditability, but it just means less fungibility for the end user. It means that your funds can be more easily frozen, et cetera, et cetera. So to me, that's not a contender, not a competitor to Bitcoin as a digital gold.
And the only current, I guess, decent market size alternative to Bitcoin that is even like close to potentially being a competitor to Bitcoin in your mind is Monero.
Yeah, but I mean, seeing what happened with the forks recently, I felt really disappointed. It's like, I wasn't even aware that they were really chasing this idea of like, we want to be ASIC resistant. I think that's a pipe dream. Like, it's just like, I saw this article recently, I forget the author, but argument being that an ASIC, another word for an ASIC is just specialization. So to be against ASIC chips is saying we are against economic actors specializing in mining our currency.
So I think, just to be fair to Fluffy and the Monero team, I don't think they were opposed to ASICs per se.
Right.
I think they were more disappointed by who made it.
Right.
Yeah. And they thought that wasn't necessarily a good situation to be in, to have most of the mining controlled by a single entity.
Right.
Yeah.
I feel like, who knows, we'll see what happens, but I think the more hard forks you introduce, the more precedent there is of intervention, and the more centralization you're actually fostering. So I really feel concerned seeing that. And then, I'm not really sure. I don't know. I'm a little bit, on the one hand, pretty optimistic about the long-term privacy prospects of Bitcoin. And then when I see the amount of friction in the privacy coin space in terms of how you have to use it, how small they still are, how maybe limited demand there still is, I just don't know. I think there's probably some space for it, but I definitely don't see it as a threat to Bitcoin long term. At least that's where I'm now. At least based on the existing coins that are out there.
Gotcha. And you did take a look at the market cap of Bitcoin. Now, I remember the days of the flipping
hysteria.
Hashtag,
Yeah.
So Ethereum was coming up. They came pretty damn close. already. This is after the initial pump of Ripple, as you guys can see on this chart.
I don't know
right?
if I don't know if
If you
the
use like,
Um,
if you use the total number of Ripple available, I think it actually did overtake Bitcoin.
It did. Oh,
Yeah.
it did. I tweeted that out.
Yeah,
At
yeah.
one point, if you did use all the 100 billion Ripple, it did overtake Bitcoin for a minute. But when we were coming back up, when Bitcoin was reaching its peak of like 20,000, I really did not expect this. I thought it was over. I really thought Bitcoin was on its way back to like a 90% dominance. And this whole, Bcash second coming and the Ripple second coming and Ethereum and all of this, as you referred to as junk, I like that, came up, and Bitcoin then once again fell even lower in its total Bitcoin dominance. I was kind of disappointed in this happening because it just showed me how like silly this is. And this is when I started really doing my, the ICO bubble is the reincarnation of the .com bubble presentation. But how did you like react throughout the Bitcoin gaining back its dominance, and then late last year, early this year, it all completely went the other way again?
Right. Well, first of all, I don't know if all the viewers can see it, but this is basically a 12-month window looking at the relative market caps of the largest currencies in the space. So like in orange, there's Bitcoin. Started off with a dominance of over. Sorry, I didn't realize it was.
Well, not that, but like you point to this. We don't have to
Oh,
do
sure.
anything.
Start
But
off with.
I can click on it like this, and they can see it.
Got it. Started off with a dominance at 90%, and that's where I identify like Bitcoin fees were $1, and all these forks, the fork wars started to happen. So I think when you're talking about the late stage, like late 2017,
Right.
to me, what happens in these markets is that when there's enough demand, eventually it is the abundance of supply that exhausts the market, because there's whatever like 5 billion worth of demand to like for all these assets. And so entrepreneurs are like, oh, there's so much demand, let's just create more ICOs. And so the junk rally to me is like all this flood of new contenders, and say we do whatever it was, like Hashgraph and IOTA, like all these weird approaches that said, hey, we can do it a lot better, and very rosy prospects. And so all those bundled together, I think that shows that it's a late stage in the market. The quality is very low. It's a lemon market. Like I said, it's really a market where lots and lots of new investors come in. They don't know what they're buying. And so it's a theme park for scammers, basically.
Yeah, I love the lemon part of. So Tuur just gave like he was on a panel where he talked about the lemon market. What were the properties again? Because
Yeah,
I
let me read
think
them.
that's very valuable for our viewers.
Let me read them. So this is and we'll put the article in the.
Yeah,
There's a great article
show
out
me
there
the
on
link,
Medium.
and I can pull it up right now. We're on
Yeah, if you
screen share.
Google,
You want me to Google? I'll
if you
Google it
Google
here
lemon
first.
market Bitcoin, lemon market Bitcoin, and yeah, that's
Right
the
here?
one.
The
After
first one
Shara.
or
Yeah,
second
the
one?
first one.
The first one.
Yeah, and then scroll down.
Let me grab it for the audience.
Yep.
I'll put it here because I'm sharing this screen. We'll get to the price, guys. Everyone is talking about the price, but apparently it just dipped.
It did?
Yeah, just scroll down.
Apparently, yeah.
It's the second list. It's the numbered list you want to pull up. Just scroll down. Yeah, this more.
Oh.
Yeah, that's
Here
the one.
Here we go.
Yeah.
There it is.
So those are the characteristics of a lemon market. Like first, so lemon, I don't know if everyone knows, but it's like this idea of like a bad secondhand car where you don't really know what you're getting. And so that's where you get this idea of like the sleazy car salesman who always tries to overprice the car. So you have information asymmetry. Basically, the buyers are a lot more clueless than the people that have been in the space for a long time. Skewed incentives. So sellers have the incentive to pass off low quality products as higher quality. Lack of disclosure framework. They're not forced to disclose anything. So you're investing in these black boxes. Lots of promises that you have to just trust the code somehow. Low quality or high variation in quality, and then also the lack of assurance, like lack of legal framework. I think all of those apply to the ICO market. So this is a great write-up. I definitely recommend reading it.
Yeah, no, we'll definitely throw it into the YouTube description. of the show.
And so there's it's a general phenomenon that's known amongst economists. Like there's quite a bit of literature about lemon markets, so maybe that's useful too.
So is it when things get overheated that you enter into a lemon market? Like what's sort of the conditions that?
Yeah, it's like there's a grain of truth. Like there's something real at the core, and then like a lot of bullshit accrues as the demand increases, right? As the average knowledge of the new investor declines because there's so much FOMO, then the quality of what's being offered in the market drops, the average quality. And so that's why I think that at the end you see this big junk rally, because the investors involved in early 2017 were just a little more sophisticated. They would call the bullshit, but at the end there was just so much exuberance that people didn't care anymore.
Maybe most of 2017 was a junk rally. I don't know.
Yeah, I mean, I agree. It's relative. But I would say there was more junk at the end than at the beginning.
I would say that's true.
All right, so we already mentioned it, but I'll just read it word for word from your paper. Personally, I'm skeptical that the developers will deliver, speaking about Ethereum, given how ETH scaling is likely an order of magnitude harder than Bitcoin scaling. Okay, so this is interesting. So you do foresee the blockchain and currency buzzword to actually start reaching the governments. We've already seen it in Venezuela, but Venezuela is a little
China, I think there's several others.
So you are seeing right there, it says, I won't be surprised to see large banks, Fortune 500 companies, or even central banks attempt to challenge Bitcoin's value proposition by issuing their own token.
Yeah,
but those tokens are going to be centralized. They have to be.
Sure. I mean, but it won't stop these entities from trying. Like it just, often there's a political response to things that happen in the market. Back in 2006, Jacques Chirac, the president of France, he launched Quairo, which was going to be a competitor to Google. It was like, it's lost, but you can still find it somewhere if you Google it. But because
France also passed a law, the right to be forgotten, so you can delete that thing from the internet.
I guess maybe they could, yeah, they could. But yeah, it was a total flop. But nonetheless, they launched it, and at the time, people took it serious. They thought, oh, maybe, they're gonna beat Google somehow, or Europe is gonna have their own.
Yeah, because it was China's still trying.
Yeah. I mean, Chinese language searching is a little bit different, but yeah.
Right.
All right. So, and this is that example that you gave of 1996, where people saw that it was already a bubble in '96, and it just kept going and going and going. And you do give examples of that later. So I'm curious why you picked these three examples of the frothiness of the the insanity of the junk rallies. You went with Tron. That had 10 billion for an ICO, and that turned out to be a disaster. It plagiarized white paper. Which white paper did plagiarize? I'm not very familiar with Tron other than
there was somebody who did some some digging, and they found that several passages were just copied from other white papers, and it was like technically significant passages. So it just seemed very shady to do that. I don't know. They just seem.
You're saying ICOs are shady?
Some.
Dogecoin is actually one of the few things on CoinMarketCap that I do not consider a scam.
I'm not saying it's a scam. I'm just saying.
I know, but it's
looking at the value, $3.6 billion for some open source code that nobody is developing, or hardly anyone.
And I learned about DentaCoin for the first time. Have you heard of this, Jimmy?
It's for dentists, right?
Correct.
Like coin for dentists or something like that. Because dentists need their own coin, right?
Right.
It's obvious, right?
Exactly.
It's a killer. How did I not think of that?
I know, right? We need a coin for cobblers.
And it's an ERC20 token. I mean, I think by now it's like 300 million. We're like 3 months later and it's already down 90%.
Yeah, a lot of things like that.
And we've mentioned.
But still, Bitcoin Cash is still $700. What is that, like 10 billion market cap? I think that is showing that there's
10% of Bitcoin. So whatever Bitcoin.
Yeah, well, 700.
Yeah.
So I think that shows that there's still frothiness in the market. Like, there's no serious development of Bitcoin Cash.
They're gonna re-enable opcodes or something.
Well, it's pretty obvious that the only tokens that's going to last into the future are going to be the decentralized ones. And again, that takes us back to Bitcoin. Talk about Tether for a minute. What's your view? It's about the same as mine. Like I'm reading this paper, I'm like, man, if I wasn't lazy, I could have totally written exactly the same thing.
Yeah, but you would have spelled it really bad.
Oh yeah, no, I would have spent more time and money spell checking than than actually writing it. So your views are pretty much in line. So just general thoughts on Tether.
Yeah, I mean, I'm more convinced than most that it's actually backed by dollars, but
I'm with you there.
yeah, I still think that there's some serious legal risks involved. For example, like I mean, it's called USDT. Like I remember with Liberty Dollar, like one of the reasons or the main reason why they got shut down was because of the word dollar,
Yeah,
and
well,
that they were
I think
pretending to kind of compete with the US dollar.
I think
So
it was more like
USDT,
an
I think a lot of
excuse.
people,
That was the excuse for the government to take it down.
it doesn't really matter, right? The reality is it got taken down.
I compare Tether to Eagle. If
Hmm.
every single Tether is backed by dollars, then all they did was recreate Eagle. It's the same thing. The government can just show up and take those dollars because they see
Right.
that the anonymous digital version of it is being used the way they don't like. Yeah. So again, we
And
kind
it's,
of
I mean,
there.
it's 13% of global cryptocurrency trading volumes is Tether, right?
Right,
The
so-
Tether pairs are very
so-
significant in
So
size.
here's the big question. So obviously, so I actually disagreed with Bitfinex a little bit when he said that all of the pump of Bitcoin was because of Tether, and I
Yeah.
never bought into that. Really, it helped. I'm not saying it didn't help at all. It helped, but Tether continues to be created at the same pace as it was before, and we have already been in a 3-month bear market.
Yeah,
So
yeah.
clearly, a lot bigger forces. I mean, obviously, the creation of Tether helped pump the price of Bitcoin, but it wasn't the cause of it. And this is what we mean. Markets bottom, markets top when there's nobody left to buy. Markets bottom when there's nobody left to sell. And all of these other things, they're all like noise that help fuel or noise that help drive it
Right.
down. You also do acknowledge that we might have topped for the year when you wrote this back in late January.
I don't know what the price was back then.
Well, on this particular chart, you're already on February 1st. So I guess you grabbed the chart a week after you wrote the majority of
That's
the
interesting. I guess
paper.
that's no. I think this got published. So this is Peter Brand. I think
Right.
Oh no.
Right, because right there,
Oh,
February
yeah.
1st. So unless you manage to go into the future, get the price of Bitcoin.
I don't know what happened.
Which
Yeah.
you're pretty good at predicting the price of Bitcoin. But this chart is from February 1st. Now at the time, Bitcoin was already trading at 9,000.
Right.
And your outlook was somewhat bearish for most of the year coming in.
Yeah. I mean, I just try to look. So I just see still a lot of. It's hard to say because like we had now the two examples. We have 2013 where we had the rally in April with the high of 260, and then it went down to 80, and then it went to 1,200 in December. And then we have the other example of late 2013 where it took 2 years to recover from that.
Yeah, we'll get to that.
Yeah, let's talk about price pretty soon.
We're gonna price. We're not. I mean, Lightning is obvious. We all believe in Lightning. Let's not.
Yeah, I did want to highlight that, even though I'm a little skeptical about the Bitcoin price this year, I think it needs some time to recover. I'm very optimistic about everything that's happening under the hood. So I just wanted to highlight that. Yeah.
Oh yeah, no. I mean, we are as well. This is what I really like. Most core developers have had the view that publishing and executing actual smart contracts on the main Bitcoin blockchain, like Ethereum does, has little long-term merit because blockchain space will eventually become too expensive for this purpose. Better to find ways to create actual contracts off-chain and only use blockchain to ensure the trustless nature of the contract. So that was good, and you are looking forward to Schnorr signatures, which is like a lot of people are. Let's what else? 2018 will most likely bring production-ready solutions for enhanced privacy in Bitcoin. We're all looking forward to that.
Bit and zero link, join market, good things.
As a result, I don't think. Here we go. So now we're getting into price slowly. There's only like 2 pages left of this. As a result, I don't think that it will prevent the 2018 market from turning bearish in the case of investors being scared. The reason to highlight all these developments is to underscore Bitcoin's long-term strength and relative undervaluation in the space, as well as to suggest a narrative for the next big bull market. I agree with that. I agree with that completely. Okay, and we already mentioned ICOs. And let's skip the little surprise scenario. And all right, let's talk about the price a little bit.
Sure.
Oh, no, developers, last part. So you talked about the highlights of Yahoo. You also talked about it on the panel where Yahoo was becoming grossly dominant over the market. And like I want to read the whole program thing because that was great. So basically, Yahoo was making most of its money from advertising, and they weren't very focused on development.
They saw themselves as a media company, not a
Yes.
technology company. Yeah.
So I'm leaving this on the screen for a little while, guys. So pause the screen later and definitely read this. This was great.
Go look at the link.
Go look at the link. Yeah, people are lazy. Those are gonna pause it and read it. But yeah. So you highlighted that Google and Facebook and other companies they were like paying for the best quality developers. And I like this highlight here. Once the quality of programmers at your company starts to drop, you enter a death spiral for which there is no recovery.
Right.
And this is why we continue to highlight how the smartest developers are in Bitcoin, and the incompetent ones keep getting kicked out, and then they're finding other jobs with other altcoins or starting their own.
Right.
And this is basically what allowed Google to completely dominate over Yahoo.
Right. And I think that a lot of developers that kind of spin out of Bitcoin, they're involved in other projects, their attention span is a lot shorter, and they're more likely to just jump from project to project, kind of opportunistically. So I think it's a lot harder to keep people interested.
When you're getting offered a lot of money, I mean, that's definitely going to happen.
Yeah.
And those people that have sort of dropped out are proving that they will go for the right opportunity and not necessarily what they're passionate about.
Yeah. And then over time, they kind of undermine their own value proposition, right? The value of their name declines because people see the track record.
You're skinning the sheep, and that you can only do.
You're killing the goose with the golden eggs, right? Your reputation, you can only sell it once.
Yeah.
Maybe 5 times, right?
And
We've seen you can sell it several times.
That spiral for developers just has happened at like so many organizations that I've seen, because A players hire A players, but B players hire C players, and then that gets to be a death spiral really fast. And
then the good developers who are there, they get discouraged and they feel underappreciated, and
and they don't get paid, or they get paid the same amount as the crappy C player, and then they leave. So it's kind of and this is I imagine it happens at a lot of I don't know how many developers are in some of these coins
and also I might have forgotten to highlight it, but your or somebody said it, maybe it was you on a panel, like some of these things are starting to get way too academic and way too theoretical, and it doesn't really make sense. So like
it's almost like Gulliver's Travel, where he's on the planet with all the scientists that just kind of like talk jargon.
I was hanging out with Peter Todd, and someone was trying to convince Peter Todd how Cardano is actually going to amount to something, and Peter Todd tries to explain to this person that they're mathematicians coding in a overly complex language. He's trying to explain to the person how flying, you do understand that flying an airplane is generally more complicated than driving a car. So you don't want that. For
what's
everyone.
Cardano written in? Is it like OCaml or something?
They have their own language, I think.
It's
was it Tezos that's OCaml? But somebody's Rust, somebody's OCaml.
Just looking at the Cardano team, I remember actually having an interaction on Twitter with the founder of Cardano, who was upset that I hadn't heard of it. So he was upset about that. But then looking at the team, it's like, yes, there are a lot of there are a lot of PhDs in there. But when I try and like drill down, I was like, what have these people shipped in terms of code? Like what protocol or whatever? And I just couldn't find much. So I think that there's you have to be careful to not place too much emphasis on academic achievement, because it doesn't really mean that you're able to then ship products as well.
Yeah, and that's a great point. A lot of academics are terrible coders, and that's like the dirty secret. There's a whole art to being a software developer. You can make the most interesting algorithm in the world. If you can't code it or make it secure, it's not really useful. You need some of both.
Right. Right.
And and a lot of people in core development, if you watch very carefully, there are people that come up with the ideas, and there are people that sort of implement them. And like Greg Maxwell might be the one that like comes up with a lot of the ideas. Peter Willer might be one that sort of implements a lot of it. I mean, they do some of both, but there's that sort of aspect to it where you want both, and a lot of people are missing one or the other. It's kind of sad.
Right. And then also, if you're academic, you most likely have not worked a lot with the implementation part.
Mm-hmm.
And so how are you even going to communicate in a good way
Yeah.
to the person that should write it?
I don't know if you've ever seen like code that's like written by academics, but they don't have any unit tests. They don't like document anything, and it's just like one big mess, and you don't use any of the good software engineering practices. So yeah, like it's very tricky to do all this right, and just because you have a PhD to your name doesn't mean that you're going to be able to code well.
Yeah.
All right, guys, let's get to the price. My chat's blowing up. Apparently, Bitcoin is dumping. I'm looking at the 4-hour chart.
Right after the 9.
Of course.
Wow.
Of course. But Tuur is also a technical analyst. He understands what he's looking at. Let's go to the higher level first. I mean, here's the weekly chart, and I drew in this trend line pretty much a couple of like 3-4 days ago after that pump, which we're going to talk about, the short squeeze. And I'm sorry, guys, I continue to say this is a bearish trend. I don't understand why everyone all of a sudden got on the bull train, including Pantera. What do you think about that?
Yeah, I mean, as far as Bitcoin goes, I still think we're in a downtrend. Like, I mean, obviously I'd love to see a bottom at some point, but I just want to be, realistic and look at the price. I do think that if you look at the market cap graph, it does look like the junks are actually picking up. So it could be that we were seeing another like altar back little phase. I don't know how long this is going to last, though, because I think that Bitcoin really drives this market. So I don't see how you could sustain that for very long if if Bitcoin is not coming along.
Right, and I continue to point out how the current environment is absolutely no different than the first 3 to 4 months of the bear trend after the 2013 December high.
I've seen them put on top of each other, the two, and it's kind of eerie how similar they look. Yeah. And that was the bear trap.
Right. Well, that was the bear trap on the weekly. We already had our bear trap on the daily. But I navigated this one fairly well because it created this beautiful descending triangle that broke down absolutely perfectly. I have it on my daily chart. But yeah, this is what I try to explain to people that, look, it's possible that we will bounce off of this 50-week moving average the way we did right here. But you can't make any conclusions until you're back like significantly higher. And here, most people got caught in the bull trap. So at least wait till you break the trend line.
Right.
So I'm just trying to like give people some reality. Let's take a look at the daily chart. Again, I'm gonna. What are your favorite like technical indicators? Like for me, it's candlesticks first, chart patterns like ascending, descending triangle second. And for me, it's the time to market indicator because I'm familiar with it from Wall Street. Then from there, I go to trend lines and moving averages and Fibonacci's. And from there, I go to the oscillators,
right?
More for confirmation. What's your like?
Mostly charting patterns, because I'm just assuming that traders around the world look at the price and they look at just the evolution of the price. Yeah, so what I see, and usually, horizontal lines are stronger. If you see a horizontal support line is stronger than a diagonal one. Triangles have worked really well in Bitcoin. Volume, check out volume. I do, yeah, 200-day move. Is that what you said? 200-day moving average?
I mean, 50-week moving average, which is approximately where the 200-day moving
Right.
average is anyway.
Yeah, to me that might confirm, that, oh yeah. But usually it's like somebody else reminding me of it rather than me like actively keeping tabs on it. So I like to goes to like a variety of approaches to then see if my view is confirmed or challenged. Yeah.
Right. This was the descending triangle that helped me navigate the 2014 bull trap here. I was able to quote this one in my articles pretty much in real
Wow.
time over this triangle. It was absolutely perfect at the time, back when I was writing it going Telegraph. Yeah, and here's the thing, right? Like people are, what do you think 2 days ago when Bitcoin just had a serious move that I attributed because there was no news, nothing really happened economically, nothing really happened in the world of Bitcoin, and it went up over $1,000 in a few hours. And it looks like fairly quickly people realized, well, some people realized that it was just, the shorts were over leveraged. Somebody tweeted this at me earlier today. Just want to point that out. Well, it was a really cool tweet. Like occasionally I post charts from other people. I'm always nervous about that because it encourages way too many people to then send me charts while that's updating. Did you pay attention to that, Bird Squeeze?
Yeah, I've been wondering about it. I think that it is true that the shorts were over leveraged, but at the same time, if you looked at a lot of the altcoins, like they had this, the moment where the big rally started, it's kind of a similar pattern as in Bitcoin. So it was kind of it made sense for that level to be support somehow, even if it's a weak support, it doesn't matter. So that came back in Litecoin and Monero and a lot of coins. So I think that a lot of traders were just looking at this, and then once it started going, they all piled on. So yeah, and then of course in combination with that over leveraged short, the squeeze.
Right. So this is what someone put together, and they tweeted at me actually while I saw this while you were on stage. And so in red right there, that red line is a record short, and then boom, they just got nailed. It happens, and the same thing was happening to the bulls.
It was like the highest volume,
earlier.
the highest hourly volume ever, right? Something
Right,
like that.
but that's the thing. I try to explain to people that don't want to listen that this is not how markets generally bottom. Because
Yeah.
all this was taking out the people that probably had the right trade.
Yeah.
It just took them out. And a lot of them will be A, too scared, or B, too broke to profit from the next batch of selling.
Right.
And what's probably going to happen is we're going to go down, and we're going to go down harder because now there's going to be a lot less shorts to profit from the decline, helping the market.
Well, they're going to be less people covering.
Right. Yeah. With less people covering, the market has a harder time finding a low, because when prices start to go back down, when they get back to that $6,000 area, people are going to be scared to buy. There will be sellers. People need to sell for whatever reason, whether they have to, build a new kitchen or whatever. People are going to sell, and people will be scared to buy, and there is no bid, and there's these monster gaps where the price just falls. And then all of these people are going to then scream that somebody is manipulating the price of Bitcoin, like the government and the Fed, and it's always a conspiracy.
When let's have a look. When
so here's the 4-hour chart that's currently started to go down.
No. I mean, like back in the big chart. Like, when did the price go above 6,500 for the first time? Like, was that November or September, something like that?
The very first time it was around here.
What month is that?
It was around September.
So like, there is like this whole.
No, my bad. October. 6,500. You said, right?
Yeah.
It was late October, early November.
Yeah, like November. Wow, so November, December, Jan, Feb, March.
And
so that's like
April.
There's a whole generation of people who bought in that 5-month window. And so the question is, how are they going to act once they're underwater? Once, how worried are they about going below that 6,500?
Well, right.
And I suspect that back in late October, there was a lot of FOMO buying. There were not too many people who were
It was all
buying
it
to
was-
keep for 10 years.
No, it was all Wall Street is getting in with CME
Right.
futures and stuff.
Right.
What worries me,
Where do you think the last value buyers were?
the last value
Yeah,
buyers?
the ones that are really not
Before
going to sell.
Before 7,500.
Yeah, but where?
Um,
Like at 4,000, 5,000,
Yes.
3,000?
Pre 7,500, like around 5,000. The break above $5,000 was probably the last value. The break above 7,500 was already all FOMO.
What?
Was that I expected 7,500 to literally be the top for the year, and I was off by a few weeks. Granted, I was off by like 65% because it went from 7,500 to 30,000, right? Because the prior ones, all of those, I mean, buying took place on breakouts, and it seemed like it went up just too high for me. Like, I don't have a quantitative metric as to why I think that, but my view had always been I expected this point here, the 7,500. And when did the scaling Bitcoin event happen? 'Cause I was talking to
November,
you
early
about it.
November.
Yeah, we
That
met.
was early November. I remember talking to you about this. At that scaling event, I called the top at 7,500. And I remember even asking you, hey, did you sell some Bitcoin right here at 7,500? And you agreed with me.
Yeah.
So did you think, I mean, like you and I were talking that first week, I thought this was going to be the top for the year. And I expected at least a drop to 5,000 and then kind of meander into the new year and then see. I came somewhat close to the 5,000 and went down to 5,400 from 7,600. And after that, we did nothing but go straight up. And that never made sense to me at all from that point. And everything above 7,500 to me was something that was gonna go away.
All right. So can I ask you guys a question? Because I'm the idiot on this one. What signs are you looking for a market bottom? How would we know? Like, how, you guys say, okay, this is not how markets bottom. What are you guys?
Okay, let me answer with an example.
Ideally, I want to see a flat line.
Really, I don't. Okay, here's what, right? So this could have been a market bottom. Markets bottom in two ways. It's either it's down there too long and people get bored, like 9 months of 2015, or you get this swift monster rebound like we saw on February 6th.
Right.
Now, you see this giant volume spike on February 6th with pretty high volume the day before and day after. This is a legitimate market bottom.
Right. It's like the puke phase. Like people are just like, or it was like what when Mt. Gox, when the Silk Road arrest happened.
Yes.
It went from like 150 to 80, and that was the bottom.
Right. So what happens is at this point, also on this day, this is where the Kobayashi of Mt. Gox ended up selling 3x what he normally was selling. Like people panicked and they sold, and there was nobody left to sell. And a lot of buyers came in here, and buyers were stepping up and up and up. If we would have stayed above this vicinity of between $6,000 and $7,000, if we stay above this vicinity, these people become long-term holders. And as we go higher and make higher highs and higher lows, these people are all happy. The problem happens is if this monster buy point cannot sustain the uptrend, what happens when all of this volume starts to feel like they might go into the red? All of this buying now turns into panic selling. And this is why double bottoms that don't happen over a very prolonged period of time, that gave these people a chance to exit with some profits along the way. This is why double bottoms are very dangerous, because I'm still expecting these people to potentially panic the moment the price gets back to their buying area. And this was their buying area. And I think people were just over leveraged short. But if this thing goes back to this area, I still think these guys are waiting to panic, because I don't think they bought in. Even if they bought in for the long term, they might feel they can buy in lower for the long term later.
Like here, I don't see deep value buyers step in and buy like big time yet. I think they would put in a little bit, but I would have like powder dry as a value buyer.
I think this was a combination of two things. This was a combination of you know, the last guy that was ready to sell in this vicinity has sold, and enough value buyers were willing to take a chance. But those value buyers will turn into sellers once they start to go underwater. So at this point, I think this was an anomaly day. Um, I mean, we could go back up. I mean, 50-day moving average is resistance, 200-day moving average is resistance. This descending trend line is resistance. The weekly chart has this monster descending trend line. Is it possible we go back up from here? Yes. Is it likely? I say less than 50%.
I think so. Yeah, I think less than 50%.
I'm still expecting a lower low, guys. I'm hoping that 4,900 will do it. My other worry
Like there's
is,
like class action lawsuits. There's like potentially forced dishoarding of ICO. Like ICO treasuries, like it's possible that they'll be forced to liquidate.
Those are Ethereum though, right?
Well, I mean, they have some Bitcoin too. There's exchanges that might be forced to liquidate some of their own holdings because of potential conflict of interest right now. There's like crypto funds that might have to just close shop, and then maybe they'll be forced to discord. I mean, I don't know, but it's just, it's just like, it's important, I think, to be aware of factors that might lead to more selling.
okay, so let me get your view on something else that I've been saying. So I think that 5,000 area could still be pretty decent technical support because we never really tested the $5,000 area. We came close a couple of times from 7,600 to 54. I still think that 5,000, like that $4,900 area, has a chance. What has always concerned me is that once we broke this $1,200, $1,300 high here, it was never properly back tested like most things are. So I remain of the belief that if 4,900 does not reverse the price of Bitcoin back to new highs, the next highest probability, strongest support is 1,300.
I mean, the previous all-time high, that's always the reference point.
Mm-hmm.
Whenever you look at an uptrend, if you want to look at support, to me at least, one of the best reference points is like, yes, a retest of the previous all-time high. So I mean, I'm not. It's possible. I mean, it's like one of those. Maybe the probability is not that high. Maybe
the probability is not high out of 100, but it's significantly higher than almost any other point you think of. That's how I view it. Like I would say,
if this was like a betting shop and we were to like put money on what would be the bottom.
It's like what, the 32 teams in the World Cup, right? Which one has the highest odds of winning?
Right.
And for me, that's still 1,300 with 4,900 coming in a very close second.
Right.
And after that, it's almost anybody's guess.
Right.
So yeah, that's.
I think I would want. The only circumstance where that would make sense to happen is just that all of a sudden all cryptocurrencies are deemed to be like plutonium, like nobody wants to touch them. Something, and I think it would come not necessarily from government crackdown, but more from, just, I don't know, like really, like the large
last resort.
Right.
I mean, I agree with you. Like, I mean, like I'm just trying to think, like trying to exhaust the possibilities. It's hard to think of an environment like that. I think, having large exchanges compromised, maybe that would be when people are like really disillusioned, that, they when they lose their own coins and then they're like, I was a believer, but this is too dangerous.
And in a way, I don't think it's that bad of a thing because, like, look, I'm sorry, if Bitcoin was trading at $200,000-$300,000 a Bitcoin right now, I'm not sure the underlying infrastructure can support that.
Yeah. I mean, we're still in the infrastructure phase for sure. Yeah.
It's not a bad thing that this is happening. Let the Lightning Network, properly test before everyone wants to use Bitcoin.
Yeah.
I think my base case scenario is a bottom at 3 to 5. Between 3 and 5,000.
Yeah, I think the 4,000 area has never been support before, so it has a very good chance of being brand new support because if trading was easy, everybody would be doing it, and it would be, everyone would be billionaires, right? That's not how it works. So I am looking at certain numbers, specifically 4,975. That's where one of the tops was. And on the way down, we kind of only came down to 5,400. So that specific number of 4,975 Also, I have a Fibonacci line at 47.55, which could be something. After that, obviously, the $1,200 to $1,300 zone, and anywhere in the 4,000s is actually very reasonable because that zone was never tested.
Right.
We blew right through the $4,000 area, and that could be something.
Yeah, that's a good point.
All right.
Definitely never a dull day in Bitcoin.
Oh yeah. All right, Jimmy. Any other closing thoughts? Maybe.
Well, I mean,
No,
I think I hear what you guys are
Yeah.
saying, and the thing that really strikes me is like I remember in 2014, I'd be going to like these Bitcoin meetups and stuff, and everyone would be like, "Oh, it's gonna recover in 3 months. It's gonna recover in 3 months, and it's gonna," and then every 3 months it would be the same thing. It's gonna recover in like 3 months. And then at a certain point, like I think around 2015, people stopped saying that. That's when I was like, okay, the bottom's in.
Yeah.
So.
Good
when
observation.
You hear a lot of
Yeah,
people just continuing to say, "Oh, it's going to recover in 6 months. It's going to recover in 3 months." I don't think the bottom's in, guys.
Right.
That's my Jimmy Song's really bad technical indicator.
I mean, it's all psychology, so it makes sense to just, there's a lot of hopium still out there.
I remember the very first consensus, or one of those conferences in that area. This was, oh no, it was 2014. No, it would have been before consensus. But I remember watching Barry Silver on stage in early 2014, talking about how we have fallen from 1,200 to 800, and we shouldn't fall anymore, right? Like, look, guys, people don't know. We're technical analysts. We're looking at the charts. Just zoom out. Just zoom out. And lately, what I've been showing people is if you're biased for one side or the other, and look, we're Bitcoin maximalists here, pretty much. I want to be biased towards Bitcoin. I'm trying to be as objective as possible. So what I did for people on April Fool's Day, actually, I did one over the price of Bitcoin. I flipped the chart and I was talking about how bullish it looked. And
Very
some
nice.
people were starting to get it. Look, guys, if you are really, really bullish right now, flip the chart over. Do one over the price of Bitcoin and then see how it looks to you then. Like, you can't be biased when you're looking at technical analysis.
Yeah, I mean,
even if you know the underlying technology is great.
Yeah, a lot of people want something to be true, and they'll find a way to justify whatever it is. Humans are not rational animals; we're rationalizing animals, and we want to rationalize that Bitcoin's going to go up. You got to be more objective than that, guys, and I think the community expects more from you in that way as well.
And I think that to some extent, experience cannot be bought. Like, it's just, like Jimmy said, like he's gone through one of these big cycles, and you just learn by like experiencing it. Like, it's like almost, you can't explain it. That it's like, and I remember being young and reading these analyses by guys who had been in the markets for decades and kind of being like, nah, I think he's wrong. And then later it's like, oh yeah, like, market psychology does not change. Yeah.
Right. All right. So we're good. Why don't you go ahead and tell our people where they can find you and your work?
I would just say, if you want to know my work, just Google my name, and the first result is my Twitter account, and that's where I post everything. If I put out articles, which is a bit more rare lately because I'm working on some other stuff, I'll put it there too. So Twitter is really the place to go.
All right. Yeah. Tuur's Twitter link is in the description of the video, along with his report that we went over, and I'll add that article about lemons.
Very cool.
All right. Hey, guys, thank you very much for watching. Thank you, Jimmy Song, for helping us co-host. And I'll see you all bright and early tomorrow. Wait, tomorrow's Saturday, isn't it?
Yeah, you're not going to go. You have your seminar.
I got my trading workshop. Weekend is when we usually take a day off. There may or may not be a video tomorrow, but we will be back Sunday or Monday. And we'll keep you guys posted. Thank you so much for watching.
Thanks.
And this song is done.